Ladies and gentlemen, welcome back to the channel. It is time to get into an intraday update on what the hell is happening here today. Technology is ripping. You have heard from Kamala Harris as well as former Vice Chair Lael Brainerd. They sounded pretty cautionary on the debt ceiling. After all, I thought we heard today a bill was going to be voted on next week. That didn't sound very confident. So that's something we're going to talk about, as well as two Fed speakers, Fed Logan and Fed Bullard, might be giving us a foreshadowing of what we're going to hear from Powell coming tomorrow. And that is going to be a massive, massive catalyst and could cause stocks to go absolutely crazy. So we're going to get into everything you guys need to know. Ladies and gentlemen, a jam-packed video for you. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. Now, number one, let's start with, like I said, the debt ceiling. This has been a pretty big reason why the markets have been going higher. People expect a deal to get done. Now, the markets were pricing in about a 3% chance of a default. That is starting to fall again today. So that is bullish. That's a good thing. A default would be like something nobody wants to happen, right? Even if you're a bear, you don't want a default to happen. Just the effects on the real life economy and people's, way of life would be affected dramatically. You don't want that. So we got news today that McCarthy says a deal could be on the floor as early as next week. But today you had Kamala Harris as well as Lael Brainerd that came on about a half an hour ago, and they didn't sound confident about a deal. They were basically stressing the dangers of not raising the debt ceiling, addressing Congress, that essentially what I just said, you don't want a default to happen. They did not sound confident, and it caused the markets to fall a little bit. Markets are going higher right now after that conference, not quite to the highs of the day, not even really close, but still, that was not encouraging. That did not sound good. So I think that sets a kind of negative precedence on the debt ceiling after really positive news this morning. Now, the big story of the day today is the Fed speakers. Dallas Fed President Logan says current data doesn't justify pausing rate hikes yet. Dallas Fed President Lori Logan said Thursday that the data points so far don't justify skipping a rate hike in June. Quote, the data in coming weeks could yet show that it is appropriate to skip a meeting. As of today, though, we aren't there yet, she said in prepared remarks for a speech. Prepared remarks. They're trying to get the markets on the same page that they're going to raise rates again in June. Now, markets, they don't want to believe these Fed speakers. Let's go ahead and pull up the probability of a rate hike in June. That's sitting at 36.7%. A 63.3% chance of the Fed pausing in June. This is not consistent with what we're hearing from Fed speakers. Now, Fed Jerome Powell, he's tomorrow. The markets will listen to him more, and they will react more to what he says. So I think that's the last bit of confirmation we need to kind of set the market straight on this. Now, how much will the markets fall on this? I don't know. It all depends. There could be things Fed Jerome Powell says that the markets don't like or the markets love. Hard to say, but what I will tell you right now is there is a disconnect between what the Fed is going to do and what the markets think the Fed is going to do. It's been that way for a while with rate cuts. Markets have been expecting rate cuts. The Fed has been saying they're not even thinking about cutting rates at all anytime soon. Markets continue to go higher, expecting rate cuts. So someone is wrong here. Either the Fed is massively bluffing, or the economy is going to deteriorate faster than we expect it to. Now, Fed Bullard just came out as well about an hour ago and says that he suggests higher rates as insurance against inflation. A top Federal Reserve official has reaffirmed his support for lifting interest rates further as an insurance policy against inflation, underscoring divisions that have emerged as the U.S. Central Bank about monetary policy. James Bullard, president of the Federal Reserve Bank of St. Louis and one of the Fed's foremost hawks on Thursday, said he would keep an open mind going into the next policy meeting in June, but suggested he is inclined to back another rate rise after 10 consecutive increases since last year. So again, they're all saying the same thing. Bullard says, quote, "Our main risk is that inflation doesn't go down or even turns around and goes higher as it did in the 70s. This is what Fed Jerome Powell said, that the last thing they want to do is pause too early and watch inflation come back and have to do more later. Not a positive thing, okay? So that's what we're currently dealing with as of right now. That is the thing that is really affecting the markets, or will affect the markets coming tomorrow, because I think you will get a bearish reaction off of Fed Jerome Powell if he reiterates the same things that we have been hearing. So I guess that's kind of a good thing for us. That can open the door to a trade, because it's like we already know what Powell is going to say. You know, it's not going to be drastic new information to a lot of us, but the markets are going to take it as breaking news, right? So I think there is an opportunity to trade that. If you guys do want to come trade with me live in real time, link down below in the description of this video. Nonetheless, markets are starting to fall right now. Maybe these things are starting to eke into the markets. Hey, we'll see. The AI bubble continues to get bigger here today. Now, you also had the Philly Fed business conditions that came in today. We'll go ahead and refresh this so we can get you guys these numbers. Philly Fed business conditions. Oh my gosh. It went to the next week. Okay. Business conditions. Where are you at? Where are you at? Business conditions came in at negative 10.3, expecting negative 11.3, so a little bit better than expectations. Philly Fed CapEx index came in at 2.5. We're expecting 2.3, a little bit worse than expectations. Philly Fed employment for May came in negative 8.6%. Ooh, expecting negative 5.2. That's worse than expectations. Philly Fed new orders came in at negative 8.9. Consensus negative 25.7. Wow, that came in a lot better than expectations, as well as Philly Fed prices paid came in at 10.9. You were expecting 8.1. Inflation, baby. This is very inflationary. Very inflationary. New orders beat massively, and prices paid for those orders also beat by over 20%. That is not good. Initial jobless claims came in at 242,000. Your forecast was 270,000. Massive beat there as well. So what today is really showing, labor market is strong, inflationary pressures are still there. So again, markets being up the way they are doesn't make a whole lot of sense to me. So I do think that sets us up for a pretty sizable fall coming in the near-term future. Now let's talk about AMC stock, because this video, after all, is about AMC, and AMC is down 0.88% here on the day. Let me tell you why, okay? Come real close. It's the option activity, okay? Let's take a look at the Ortex data. AMC is being attacked by the shorts. They're not shorting as many shares anymore. They're going at it with the options. Let's go ahead and pull this up. Go to the options. Check it out. A June 16th $10 call for $105,000. A June 16th $10 yeah, that was a call actually. Huh, interesting. A June 16th $10 put for $8 million. July 21st $10 call, actually, $240,000. And a July 21st $10 put for $4.5 million. This is, what, 23,000 23-ish thousand put contracts for that $10 strike again. 23,000 times 100 is 2.3 million. That's how many shares market makers likely had to go out and short today. On another low volume day, you've only seen about 8 million shares trade hands today. That is a lot of the float that is being shorted by market makers because of these options, right? So that is what is currently taking place with AMC. They're trying to suppress the stock. At the same time, I think a lot of them are hiding short interest in these options, because if you buy these options, a lot of the time you can report that you covered on your short positions. Obviously, you're not legally supposed to, but it happens. And they take full advantage of that. Unless you get audited or investigated, they're not going to be able to see that. There's just too much, option activity out there. There's too much going on for, the SEC and other, agencies to pay attention to that. But it's clearly happening in AMC stock here today. So maybe you guys want to hit that like button and subscribe to the channel. Push this video out to as many people as possible, because this is clear as day. Why are you seeing this kind of option activity so deep in the money? Questions, right? Live short interest of free float for AMC stock sitting at about 25%, 129 million shares currently sold short. Cost bar average 110%, cost bar max 135%, cost bar minimum at about 55%. Interactive brokers short availability at about 0 shares available, with a cost to borrow fee last renew of about 70%, guys. So there you have that. Not any specific news coming out with AMC. Again, you want to watch to see kind of what happens with the special mastery. I think that's going to be the next update we get as far as the courts. And that's the next big thing that could really move AMC stock. Now, if you look at AMC on a technical basis, you're fighting hard today. AMC's 50-day moving average is $5.06 per share. You are at $5.07 per share. You are down 0.5%. You're holding support at that 50-day moving average. The longer you hold support here, obviously the better, and we have held support here the last couple of days, so that's a positive sign, but you need to get above this. You need to push away from that 50-day moving average, and it looks like the shorts just don't want to see that happen. The shorts don't want to let AMC get bullish. They don't want to see retail take over the stock the way we did before last earnings, guys. So I do think this sets us up for a very interesting dynamic. You are technically still in a bullish uptrend, as we did not hit a lower low than the previous low we set back here, April 24th. Technically, you're still in a bullish uptrend. And last time we got down to that 480 range, AMC stock seen a bounce. That was yesterday, and the stock has bounced from that low. Let's go ahead and see. Bounce from the low to where we are now, about 4.5%. So it's not like we're out the danger zone yet, but we're not in the danger zone yet, if that makes sense. We're not in the bearish zone yet. So there you have that. It looks like if we are to get bullish, you could expect a bounce at any time. Now, I'll tell you, heading into tomorrow, if liquidity does start to rapidly dry up, because maybe technology stocks start to get a hit because Fed Jerome Powell says, like, hey guys, we're not going to cut rates. We're probably going to raise rates in June. That's something the markets are not expecting, okay? And I know I've already said that because other Fed speakers have been saying that, but the markets have not reacted to that. So it could cause liquidity to dry up if stocks do start to fall. Now, obviously, liquidity don't dry up in a day. A pond doesn't dry up in a day, or a river or a lake. It takes a little bit of time. And the hotter it is, I guess you could say, the worse a sell-off is, for this analogy, the quicker that could happen. And that's kind of my base case scenario after stocks are like Nvidia and Netflix and Microsoft and Apple and basically all of the well-known names in the markets, the biggest companies in the world. are gaining hundreds of millions, billions of dollars of market cap based off of AI, that will come to an end. And when it does, based off of the market breadth that we're currently seeing, you're going to get a pretty big fall. And this is, showing you just how disconnected the markets are. Like, the breadth is terrible right now. Stocks are falling. NASDAQ is ripping. But the big players are hitting new 52-week highs today. Something to keep in mind, something to watch for. Let me know what you guys think about this down below in the comment section. What do you guys think about the Fed essentially giving you a massive warning signal? And let me know what you think down below in the comment section about tomorrow as well with Fed Jerome Powell. How are the markets going to react? How are you guys trading that? All of it. If you guys want access to all of my trades in real time, link down below in the description of this video. We made a couple moves today. One notably I think you guys will like is a call purchase on GME. Not a recommendation, never is, but that's personally what I am doing, guys. So thank you for watching, and I will see you in the next one.